Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. It is Friday, September 12th, and you are tuned into the Friday Chart Fix. Thank you very much for joining us. So today we're going to start off with bonds because we had a big surge in TLT this month and a big plunge in long-term treasury yields. But that's not a negative for stocks as long as TLT continues to underperform SPY. And we'll look at that chart. We'll look at a way to find the best hunting grounds within an index or a sector. We'll show you the Russell 2000 ETF is finally starting to outperform SPY, and it's really outperforming the mid-cap SPDR MDY. Then we'll look at healthcare, which is looking healthy again. And within healthcare, we'll see that Biogen is turning the corner with a trend composite bullish signal. Let's hit the charts. So this first chart shows TLT, which is the long-term treasury bond ETF, and it's been mostly in a downtrend since that October breakdown there, and we can see it just continues to move lower into May. And then it started basing. We found a lot of support here in that 84, 85 area for a few months, and then there is the big move in September. We broke above these resistance levels. We broke above the 200-day. So this is a bullish breakout for TLT. No ifs, ands, or buts about it. Now, I'm really mostly concerned with the relationship between TLT and SPY because we're currently in a bull market for stocks. And so that means I'm pretty much interested in stocks. I'm not that interested in bonds. If there's a bear market in stocks, then I would be interested in bonds. But we're in a bull market for stocks. Now, one thing I look at is the TLT SPY ratio to measure the risk on, risk off situation. And if we go back here and we look at the beginning of 2025, you can see that TLT is starting to advance here. And then it's not until the latter part of February that you see the TLT SPY ratio starting to move higher, and it gets above its 200-day in mid-March. And there was a little dip in that relative performance, but then a surge in late March and into early April. And that is, of course, when the tariff chaos hit the markets. And so when TLT was outperforming from the latter part of February into March and April, if you look at SPY in the lower window, in March, early March, it broke its 200-day and it moved sharply lower into April. And so if TLT starts to outperform SPY, I would be concerned. Now, looking at how this evolved after April, you can see that in May, the TLT SPY ratio moved below its 200-day and fell sharply into mid-May. And so that put things back into risk on mode, which is bullish for stocks. And then you look at SPY and it moved back above its 200-day in May. So we've been in a risk on environment since the middle of May, where TLT is underperforming and SPY is rising above its 200-day. The trouble would start if we start to see this TLT SPY ratio get above its 200-day. That would mean TLT is outperforming stocks, and you don't want to see the safe haven asset outperform the risk asset. You want to see the opposite. You want to see the safe haven asset underperform the risk asset, and that is bullish for stocks. Right now, that's the situation, but I'll be watching this going forward. So when we're in a bull market, where do we find fertile hunting grounds for individual stocks? Well, we can look at the internal breadth indicators that show the percentage of stocks above the 200-day EMA. And that's what I've done here. I've created a chart list with all of these symbols that you see here in the symbol column. We've got 4 indexes: NASDAQ 100, S&P 500, Mid-Cap 400, Small Cap 600. And then we have the 11 sector SPDRs basically. And that shows the indicator here, the last here, is a percentage of stocks above the 200-day. And so I'm watching this indicator because if you look at the indexes, 71% of mid-cap stocks are above their 200-day EMA. That's the strongest of the group. Now, the other ones are by no means weak, but it seems that mid-caps as a percentage have the most stocks above the 200-day EMA. So relatively speaking, the most uptrends. That means the mid-cap area would be a good place to look for individual stock setups. If we look at the sectors, I can see 3 above 80%. Communication services, consumer discretionary, and utilities. Utilities, 90% above the 200-day EMA. That means utilities are fertile ground for looking for individual setups. So find a list of utility stocks, put them in a chart list, and look at those individual charts for setups. The third thing I look at is for a recent change that might be significant. And you can see I've got the plus minus column here and the change column. And so this is the change. So the last was 62%, and that's a 5-point change. So that means it was 57%, and it changed plus 5 to 62%. And if we go down here, I can see that healthcare was up 5.82, and it moved from below 50% to above 50%. 55% of healthcare stocks are above their 200-day EMA. So that shows a change maybe within the sector. The majority are moving into long-term uptrends. Also, if we look at real estate, REITs had a big move, plus 9.68. So that moved from below 50% to well above 50%. So we're seeing a big change or a big number of stocks within those sectors moving into uptrends, and that makes them fertile grounds for looking for bullish setups. So what makes me think we're in a bull market? Well, it's the market regime page at trendinvestorpro.com. This is the current reports and videos page, and most of these reports and videos are for premium subscribers. There are a few free items on this page. If you scroll down there, you can see the complimentary items. And this week we were looking at SPY hitting a new high. Tech ETFs are mixed, but we're seeing breakouts in some. NASDAQ 100 breadth, not that great, but utilities are breaking out. And then the market regime page. We look at 3 breadth models. We look at the yield spreads, and we look at short-term treasury yields. And all 3 of those are pointing to a bull market environment. So you can take a trial to Trend Investor Pro to learn more. And by the way, if you're on the home page here, you can see an idea of what we offer on our premium services. And at the top of the page, there's a link. And you see premium services. Anybody can look at the Getting Started page. And on that Getting Started page, I do have a video that explains the services at trendinvestorpro.com. Basically, we have 2 services. We have the traditional chart analysis, which is what I'm doing now. And we also have systematic trading strategies, which are driven by an algorithm. They're back-tested, and they are purely systematic and automated. And when the trend model is bullish, the systems are active, and we generate signals for S&P 500 and NASDAQ 100 stocks. So take a look at that Getting Started page to learn more and view the video. So now let's turn to small caps, because IWM is just now starting to outperform SPY over the last couple of weeks. First of all, if we look at the IWM chart, it's been in an uptrend since the breakout on June 6th. So there you had a break above this resistance level, you had a surge, a pennant, and a breakout. Even though we were below the 200-day, this is the breakout that reversed the downtrend. Then we continued higher. We had a corrective move back down to the 200-day into early August, and then there's the second breakout on August 12th. And so you can see IWM is closing in on its November high. Now, a move above 245, it would be a milestone. It would record a new 52-week high, and it would confirm the existing uptrend. I don't think this will be a breakout. In my eyes, a breakout is some sort of move that reverses a downtrend or signals the end of a pullback. When you're in an uptrend already and you're in a bull market, higher highs are expected. So if you break a high from way back in November, that's a milestone. That's not like a breakout. That doesn't mean blue skies. It's just part of the ongoing uptrend, and higher highs are expected. So now let's turn to relative performance. So I've got 3 relative performance lines for IWM: relative to SPY, relative to the equal weight S&P 500, and relative to mid caps. And if we look at mid caps, we can see that IWM started outperforming there in June and July, had a little dip in late July, but then really outperformed in August. Serious relative strength. Look at the steepness of this line. If we look at the equal weight S&P 500, started outperforming in May, June, July, and then more outperformance in August and into September, but not as steep and pronounced as relative to mid caps. And then we look at SPY. It was flat, the relative performance line, flat from April into August. And then in the latter part of August, we finally got a breakout and starting to outperform. So this is positive for small caps because now they're outperforming large caps, equal weights, and mid caps. So healthcare is finally looking healthy again. I showed you the percentage of stocks above the 200-day EMA. We saw an improvement within the sector as that number moved from just below 50% to above 50%. So the majority of stocks are in uptrends within healthcare. And then if we look at this chart here, this is XLV, and it's really had a rough time in 2025. It started off moving higher, but then got clobbered in April and never really recovered. The rest of the market recovered here in April, May, June, and into September, but healthcare did not. Healthcare traded flat. So I've been watching healthcare actually since the latter part of July, right around 131, because that's when it had a long-term oversold reading. And there's a link to that article in the written commentary, and you can go back and look at that. But I saw a point in time where healthcare was extremely oversold. And if you took a 2-year view, then most of the time healthcare was higher 2 years later. Yeah, I know 2 years is a long time. But the thing is, that's like a long-term mean reversion setup, and it gives you an outsized gain going out 2 years. But if we look at the chart and see what's happening now, we can see a bullish reversal. We have a double bottom, so we have two lows. So this means you plunged, demand came in. You moved higher, you hit resistance. So we had overhead supply in that 137, 138 area. And then we fell again, but demand came in again at 128, 129, support. And then look at the steepness of this surge. This was a strong move. You actually had a gap here, you had a gap here, and you broke above resistance in late August. So that basically confirmed the double bottom, that breakout there. Now you can see that after the breakout, we had a battle zone. And that's not uncommon to get a battle zone. You got the bulls and the bears slugging it out for the long-term trend, basically. You have a downtrend and the bulls are trying to turn it around and get an uptrend going here. So there's a battle going on here. But this week you can see we had a push higher and a move above the 200-day. So I think this is bullish price action for healthcare, and it is looking healthy again. So as noted, I think that the healthcare sector is one of these sectors that's showing recent improvement and could be fertile grounds as far as hunting for individual stock setups. So I was looking at some recent trend changes using the trend composite, and this is the Stock Charts ACP charting app. And you can see in the bottom window, we have the trend composite. And this basically aggregates trend following signals in 5 different indicators. And you can find out more about this indicator by going to the right-hand side and clicking on the plugins link. So we can see here that the trend composite, it turned bearish there in July of 2023. It stayed bearish throughout 2024 and into 2025. It stayed negative, basically, the majority of indicators. And then in August, we had a trend reversal when it went positive. It hit +1. But trend following indicators are prone to whipsaw. That's just the way it is. And you can see we moved back to negative for a little over a week. And then on September 3rd, we moved back to positive at +1. And then you can see we moved to +3 this week. So I think this move to +3 means the trend has reversed and Biogen is now in a long-term uptrend. And you can see those signals with the pink lines for the bearish signals. And you can see here in August, September, we got the whipsaws, but the price was breaking out here. And I want to go to a bar chart, a sharp chart, to show the details of this breakout. So here's Biogen on the bar chart on sharp charts. And there you can see the breakout in the latter part of August. And we actually closed above the 200-day. But then we had a dip from 140 to 130 in the latter part of August. And this is kind of like a battle zone Because you see, the bulls are trying to reverse the uptrend, but the bears say, not so fast. And you get selling pressure that pushes it back. But the bulls say, no, we're going to do this. And you get that big surge, and you got another surge on Thursday. So now you're getting extension after this breakout. So I think this breakout is bullish for Biogen, and the trend is reversing. If we look at the price relative, you can see that it poked its head above the 200-day. So Biogen was lagging throughout 2024 and 2025 below its 200-day, that price relative, and now it's just getting above the 200-day. So relative performance is also improving. So the question is, what do you do now? Well, if you're a trend follower, you can take the trend signal and you can do what Jerry Parker says, have loose pants. In other words, have a wide stop or wait for the trend to reverse to get out. Or you can put Biogen on your watch list and use an indicator such as %B or the momentum composite to look for short-term oversold conditions. And that's what I'll be doing with my follow-ups on Trend Investor Pro. I'm looking for uptrends and I'm looking for tradable pullbacks within those uptrends. So that's a wrap for the Friday chart fix. If you'd like to learn more about my services, check out trendinvestorpro.com. This weekend, I'll be putting out a special report where I'm going to cover weekly charts. It'll also include a video. And I think it's important that you got a Fed meeting coming up next week. I think it's important that you step back and you keep perspective because we could see some fireworks with the Fed meeting and the Fed announcement. There's usually some extra volatility. But the bottom line is we're still in a bull market. Interest rates are set to fall. The Fed is dovish and yield spreads remain narrow, showing no stress in the credit markets. So thanks very much for tuning in and have a great weekend.